Watch out, here I come.
Welcome to the Lunch Hour with Mr. Credit.
Ooh, hot.
Oh, yeah, that's hot. That is hot.
And today, it's Turnaround Tuesdays.
Let the games begin! Hey-o!
And today, we're teaching you how to point your financial life in the right direction.
Gee, I sure hope there's a happy ending. I love a happy ending.
And now, the Lunch Hour with Mr. Credit on ESPN Radio 1700.
Hello, everyone, and thank you for tuning in. This is Bruce McPherson, certified reverse mortgage professional. I'm sitting in as guest speaker at the last minute. Our normal guest was unable to join us because of an illness, so I'm going to be the guest host today. And so we'll be talking a bit about strategic, smart use of the various reverse mortgage options that are out there and the reverse mortgage strategies that have been studied extensively over the past 3 years and how they can help a wide variety of people. We're also going to be talking with James McFall, who is a very experienced estate planning attorney. And what we're going to be talking about a lot today is the importance of proper planning for the future and why you don't want to put it off. James, are you there?
Good to see you, or speak to you again.
How you doing, James?
I'm doing well. Call me Jim.
All right. Jim, I'm glad you could join us. What's happening there in the world of estate planning these days? How are things going there?
Well, it's busy as always. It's you know what they say, death and taxes are two things you can't avoid.
That's for sure. We're going to be talking a lot today about why it's important for people to plan ahead. We're going to be talking about topics that are important for almost everyone out there who's listening, regardless of their age, but especially if you're an adult, if you're middle-aged, if you're approaching retirement. There are things that you need to have in place that you may not even realize you need to have in place, and one of them is a complete estate plan. And I know a lot of times when people hear the word estate plan or estate planning, they don't realize that's for them because the word estate makes it sound like it's just for rich people who have an estate. You picture a big English estate in the countryside or something like that, but nothing could be further from the truth. Estate planning means getting estate planning documents in place, things like a power of attorney, things like a living trust. And Jim, I'm going to let you talk about why these things are so important and why it makes sense to be proactive and take a look at these options now and not put it off.
Well, you're absolutely correct. You say you have to do a total plan and look ahead. Wealthy people already know this. Wealthy people have their accountants. They're already looking at things down the road. But the average middle-class person is the one who's really affected. And traditionally, we always thought, okay, well, I'll have a will, and that'll take care of me. And there are a lot of problems with that approach. There's nothing wrong necessarily with a will, but there are both pros and cons. One of the pros to a will is that, frankly, they're cheaper. So, but the flip side of that is when you die, the will gets probated, and that means that it can be tied up in the courts for months or even years. And if you don't have a will, then the state's going to tell you what to do or decide what to do with your property.
Yep.
So another approach is a trust, and they are slightly more expensive to set up initially, but you avoid the probate and you avoid the costs associated with probate.
And probate can be very expensive, right? I mean, we're talking many thousands of dollars that, if you pass away and all you have is a will, then your estate goes through probate before the assets can be distributed to your heirs. And your heirs end up paying, correct me if I'm wrong, isn't it many thousands of dollars in addition to the, inconvenience and delay and aggravation of having to deal with the state probate court?
Yes. It's, you're looking at thousands or more, depending on how long it takes.
Mm-hmm.
And so you can avoid that. You can avoid some of the tax issues. The other problem that people don't realize is that if the property's tied up in probate, your family can't access it, and therefore you may have thought you left, you say your wife or your children or your husband, whatever, well provided for, but it doesn't do them any good if they don't have access to the funds.
Absolutely. And that is, I would think many times, far more important of an issue or more problematic of an issue than the cost is. The fact that it really messes up, really can cause a lot of problems with delaying the transfer of assets. I can think of one example from the reverse mortgage world is, if somebody gets a reverse mortgage, under the new rules, if you're 62 or older, but let's say your wife is not 62, so she doesn't qualify, under the new rules, you can still get the reverse mortgage. Your wife would still be protected so that the reverse mortgage loan balance would not come due when you pass away. But your wife would have to, certify that she's still living in the home. And also, just as importantly, in fact, more importantly, the home would have to pass to the wife within 3 months after you pass away in order for her to have that protection. Now, if you have a living trust in place, that's no problem. The house is going to pass straight to her because of the living trust. But if you don't,
what'll happen is if you have a living trust in place, technically the trust owns the house. So when
that's true.
I die, my wife doesn't have to worry because there's no change in ownership but she's the beneficiary of the trust.
Right.
And so it just goes on without missing a beat.
That's true. Yeah, that's. Thanks for explaining the technicalities behind that. So the reverse mortgage servicer would see that she is now the beneficiary of the trust, and the trust is in the property, and that would meet the requirement that she now has the property in their eyes. But if there's not a living trust in place and it gets tied up in probate, and if it drags on for more than 3 months, which it easily could, then that could really...
It would.
It would, yep.
It just doesn't move that fast.
Yep, and that would create a problem. Now, the example I brought up is a pretty rare example. It's very rare that somebody gets a reverse mortgage without waiting for their spouse to also reach the qualifying age of 62, but it is something that can happen. And that's just one example from my world. I'm sure there's a lot of examples out there that you've come across of, what people have to deal with when they don't have an estate plan already in place.
Well, I'll give you a really common one. When people die, they usually have some sort of funeral service. They may be cremated or they may be buried, but those services can be quite expensive. And if you don't have immediate access to, say, bank accounts or savings accounts and things like that, you're going to have problems paying for it.
That I'm sure that must be a very common example. I mean, imagine not only are you grieving the loss of the loved one, but then you're unable to pay for the service simply because, way back when, when it would have been made sense to set up a living trust, it was just never done.
Yeah, and a lot of this is so easily avoided. Even if you have a will, you can avoid a lot of these things, but you need to plan, and you need to talk with not just an attorney. Frankly, I think you need to talk to financial professionals like yourself that you can set things up ahead of time or plan for the future. Mm-hmm. You and I were exchanging some emails, and one of the things I pointed out was sometimes people, because they like the tax advantage of a mortgage or something, they aren't careful to pay down and have a lot of equity in the house for when they hit retirement ages. And the advantage of having a tax break goes out the window if you don't have much of an income. Mm-hmm. And the reverse mortgage doesn't do you much good if you don't have equity.
Right. Yep. You can't qualify for reverse mortgage if you owe more than the value of the home, or actually even if you owe an amount that's close to the value of the home. You have to have a decent amount of equity. Yep. It's a very good point.
These are all things that can be addressed with proper planning. Another thing that comes up. You mentioned in the start of the show, power of attorney. A lot of people think, okay, my spouse is ill, but I have a power of attorney. And then when the spouse dies, they think, okay, now I can, transfer accounts and do all that. When the spouse dies, the power of attorney dies with the spouse.
Mm-hmm.
And so that's something people need to plan for. They need to have directives to physicians set up. So if someone's in a situation where their health is declining or something like that, and decisions need to be made about the health care, it helps if the patient actually was involved in that process and tells the hospital and the doctors what they want done.
Absolutely. I think everyone could relate to, just how tragic it would be if you were, lying in a coma, somebody needed to make a decision about what to do, a decision that's consistent with what your values are and what you would want to have happen. And if there's no document in place, a healthcare directive in place, then what you would want that to be done might not be done for you. I'm sort of speaking in broad terms here.
And even if you've talked with your family, it's comforting for them, at least to some degree, that if some tough choices need to be made and you've already made those choices, that it's written on paper form so they can look at it and say, I know this is what I was told to do, and here it is written, so I'm following your loved one's wishes.
Yeah, they need to have that legal protection.
It's also the emotional protection. I can't emphasize that enough. I've seen too many times when, frankly, people are in the later stages and they're suffering and they don't want to suffer anymore. And you're talking about extending things for a week or two of sometimes agony, or not.
Right.
And it's hard for loved ones to sit there and say, well, I'm going to stop the life support.
Right. These are very important things for people to consider. We're going to be taking a break real soon, and when we come back, we're going to be talking more about this. I'd like to get more into why it's so important to have a power of attorney. I can speak from my experience of what happens if you don't have a power of attorney and then you become incapacitated. Before we go to break, James, could you give the listeners your phone number or website, however you like to be contacted, or email address?
Oh, certainly. We can be reached at Neil Diamont, and you can ask for Jim McFall or Jared Kaza. Our phone number is 619-238-1712.
619-238-1712. And I am Bruce McPherson, certified reverse mortgage professional. I can be reached anytime at 858-784-0014. That's 858-784-0014. When we come back, we're going to talk more about why it's so important to plan ahead, get a complete estate plan in place, and I'm going to talk about why a power of attorney is so important from my own experience. And then we'll talk a little bit about strategic use of reverse mortgages when we come back. Stay tuned.
So much. I love you.
If you would like free advice from Mr. Credit, just call or text 619-786-7853. That's 619-786-7853.
Welcome back to the Lunch Hour with Mr. Credit. And today, it's Turnaround Tuesdays on ESPN Radio 1700.
Hello and welcome back to the Mr. Credit Radio Hour. I'm your guest host, Bruce McPherson, sitting in for our regular host who was couldn't join us due to illness. I am a certified reverse mortgage professional. We're going to be talking some more about the importance of planning for the future, whether it's learning about all the options available within the government's insured home equity conversion mortgage program, also known as the modern reverse mortgage, as a way to improve your retirement as opposed to waiting till the last minute to rescue your retirement. We're also going to continue talking with James McFall. You can call him Jim. Jim is an estate planning attorney, very experienced, and estate planning is such an important part of planning for the future. And Jim, I tell you, I continually come across people who do not have an estate plan. Some of them don't even have a will, which is scary. But a lot of customers I talk to, they have a will, but they don't realize that they need other elements in their estate plan. They don't realize the importance of having a living trust in most cases. They don't have a power of attorney document. They don't realize how important that is. Before I talk more about that, could you explain for the listeners exactly what a power of attorney is, what that document is, and what it accomplishes for the client?
Sure. And a power of attorney is simply a document where one person designates somebody else to be able to make legal decisions for them. And it can have different forms. Frequently, the power of attorney will only kick in if the person drafting it becomes incapacitated. So in the previous segment, you were referring to clients of yours that go into a coma. And at that point, they're no longer able to make decisions. Or sometimes people with long-term illnesses may be under heavy pain medication, in which case they probably can't make decisions anymore, or they shouldn't be. And so power of attorneys come into play there. They can come into play if someone's just been in a tragic auto accident and is recovering. Maybe they're in a coma, maybe they're on pain medication, something like that. It's not a permanent shift, but it's something that works in a temporary situation. Sometimes you can have a power of attorney when one person leaves the country. It's less common in today's world because communications are so rapid, but it does happen sometimes.
And typically when I'm dealing with a client who does have a power of attorney, and I'm dealing with, instead of dealing directly with the client to sign the documents, et cetera, I'm dealing with the son or daughter or other family member who has been designated to have the power of attorney over the client to sign on their behalf. It's always what's called a durable power of attorney.
Yes.
And I assume there's powers of attorneys for all kinds of reasons, some of which you described. But a durable power of attorney, correct me if I'm wrong, but that it's called a durable power of attorney because it remains in force pretty much no matter what, right?
It remains in force until the person dies.
Right.
And that is something that people don't always understand, is that they think because they have a power of attorney, even if the person passes, they can still make decisions, and they can't anymore. They can't sign checks and things of that nature, pay bills.
And the best way to be prepared to handle those things after the loved one dies is to have a living trust in place, I assume.
That's very important. The power of attorney is important to have, even if you have the living trust, because sometimes people think, well, if I have the trust set up, the trust can make the payments and the trustee can take care of these things. Mm-hmm. But the power of attorney allows an individual to, for instance, transfer more assets into the trust. Mm-hmm. This is a common problem, whether you have a trust or whether you have a will. People draw these documents up, and God willing, they live longer. Mm-hmm. And time goes by, and all of a sudden, maybe they have assets they didn't have. Maybe they've sold their house and bought a new one. Well, the house that was in the trust, when they sold it, they may not have put the new house in the trust. Mm-hmm.
I've seen that a lot, where people have a living trust, but they never got around to deeding their house into their living trust. Yep.
And I see it all the time. People come in and they haven't looked at their trust in a number of years, and they've either had someone draw it up or they try to do it themselves. But I'll look at the trust documents and I'll say, well, the only problem with the trust is you've never funded it.
Mm-hmm.
You created the documents, you said how you want everything disposed, but you never actually transferred title into the trust, be it your automobiles, your bank accounts, your retirement plan, your house.
Yep.
And that's why it's so important that, one, have professionals do it, but two, have the professionals work as a team, not just the lawyers, because the lawyers don't necessarily know all your financial assets.
Right.
And even though when people come in our office, we have an extensive vetting process where we try to find everything so they can be accounted for, people are frequently reluctant to tell you.
Mm-hmm.
And so things like life insurance policies, which are not part of a will and they're not part of a trust usually, get overlooked. And so even though I may not need to know about the existence of a life insurance policy when I draw up the trust, it's important that I do know about the existence of a life insurance policy. So if your children come to me and say, Dad passed away, can you help us, manage these things? So someone can contact the life insurance company.
Right. That's a very good point. It's another example of why it makes sense for anyone out there to do proper planning and do it with a professional. Sit down with somebody like Jim, somebody like me, if they're looking at they're funding their longevity through a strategic reverse mortgage. Sit down with a professional, somebody who's very experienced, who's going to ask all the right questions, just like the example you just gave, Jim. Because if the right questions are not asked up front, then the plan that's put in place might not be the appropriate plan. And that's such an important part of planning. It's a whole team effort. It involves a lot of discussion. It's not just sitting down and picking some cookie cutter, simple, generic solution. I can give you examples of why it's so important to have not just a living trust, but also a power of attorney. Sometimes I get calls from somebody who, here's a common example. Someone will call, it's the daughter of an elderly homeowner who needs to get a reverse mortgage to pay for in-home care or other needs. And so the daughter will say, I'm the trustee of her trust, which typically means that the daughter is the successor trustee, but they don't really understand that. And so the daughter will say, well, I assume I can sign on behalf of my mother since my mother is, cognitively impaired, incapacitated. But the realities of the regulations that govern reverse mortgages are that the daughter would also have to have a power of attorney. It's not enough to just be a trustee or successor trustee of a living trust. And but then it's too late to get a power of attorney if the senior is already incapacitated. So you don't want to wait and get these things at the last minute. Get them as soon as you can, or at least sit down with a professional like Jim McFall and find out what you need to have in place.
We're going to have something similar happen just this week, or actually not this week, last week, where someone went to the hospital.
Jim, I apologize. I just got the signal that we're about to go to break. So let's get to that example when we come back from break. But again, just want to give out your phone number in case anyone has questions for you about any aspect of estate planning, living trust, power of attorney documents, healthcare directives. All of this is very important, of course, to have a will. Jim's number is 619-238-1712. Again, it's 619-238-1712. When we come back, we're going to talk some more with Jim, and then we're also going to get into some really exciting news regarding new options available within the government's federally insured reverse mortgage program. So stay tuned.
Narrow streets of cobblestone, 'neath the halo of a street lamp.
If you would like free advice from Mr. Credit, just call or text 619-786-7853. That's 619-786-7853.
Welcome back to the Lunch Hour with Mr. Credit. And today, it's Turnaround Tuesday on ESPN Radio 1700.
When it's time for leaving, I hope you'll understand.
What a great song. I love the Allman Brothers. Welcome back, everybody. This is Bruce McPherson, local certified reverse mortgage professional, or CRMP. I specialize in reverse mortgages for the past 11 years. I love to talk about smart, strategic, proactive use of a reverse mortgage strategy to avoid having to use a reverse mortgage later as a last resort when it might not work as well for you. I love talking about planning for the future. And along those lines, we've got Jim McFall on the line with us. We're going to continue our conversation about proper estate planning, why it's so important to sit with a professional like Jim and learn whether you would benefit from a complete estate plan, not just a will, but also a living trust, power of attorney, a durable power of attorney to prepare for the future, and also healthcare directives and anything else that is going to fit your needs. Jim, welcome back.
Good to be here. Before the break, we were talking about, I was going to mention that a week ago, a client went in the hospital and took a sudden turn that was unexpected. And they thought, we don't have a physician's directive and we don't have a power of attorney drawn up. And they realized they needed it. And by the time I got involved, it was too late. He couldn't make the decisions to sign it.
What a tragic situation. And that happens a lot, doesn't it?
It happens more frequently than you would think, and people don't want to face the inevitable, and the inevitable is going to happen to all of us. We're all going to pass away.
Mm-hmm. It's true. People. One of the reasons people delay and put off sitting down with an attorney to make an estate plan is it is uncomfortable for a lot of people to think about what's coming down the road. We're all going to pass away someday. We're just here on this earth for a short time. We've got to prepare to make sure that our heirs are going to receive our assets quickly and without going through probate, which is what happens if you just have a will. And plus, all of us have a pretty significant probability of becoming mentally incapacitated, whether it's a stroke or you fall and hit your head, all kinds of reasons. Like you said earlier, medications that may be required that make you unable to really make decisions or focus on complex decisions. For all these reasons, people need to have the proper legal documents in place so that their loved ones can take over their affairs for them and have everything continue and do what's necessary for their care.
At the risk of sounding harsh, and it may sound harsh, but it's true, it's really selfish that people don't take care of the future and provide for the future because they don't want to face it. Because what ends up happening is the loved ones are left holding the bag, and their job is made much more difficult because they haven't been given the resources and the tools to deal with the situation.
That's a very good point. And all of that can be avoided by, not putting off the planning. Just get the planning done. Call James, call any good attorney, sit down with a good financial professional, sit down with a good experienced reverse mortgage professional if you think the reverse mortgage might be an important part of providing the money needed for down the road. Do the planning now. Find out what you don't already know. A lot of us, it's very easy for people to think that they know everything just because they read a lot on the internet. But I'm here to tell you, I'd say about 95% of what you read on the internet is simply not true. It's inaccurate. It's maybe half-truths without telling the whole story. I think that's true whether you're looking at reverse mortgages or any other complex financial issue, complex financial program or product, or a complex legal issue. I mean, would you agree with that?
Well, the Internet's been good for my business. People try to do things themselves, and they usually don't do it well. And I don't pretend to be a financial advisor. That's why I think it's important that when you're drawing up your estate plan, that you work as a team with financial advisors, with the attorneys.
Absolutely.
I mean, I wouldn't know the first thing really about reverse mortgages, and yet I would be willing to bet that I know more than 90% of the world out there, and that's enough for me to know how much I don't know.
That's a very good way of putting it, because once you learn about something that's potentially complex, like all the different reverse mortgage options, you only have to learn a little bit to realize that there's a lot more that you don't know, and that the best way to really know is to sit down with a professional. I feel the same way about legal issues such as estate planning. I would never pretend that I could read somebody's living trust and be able to effectively tell them what everything in that trust means, and more importantly, what may be missing, in case the living trust was written, decades ago and hasn't been updated, or maybe wasn't written by a good enough professional attorney. You've always got to go to the experts. And it's really a good idea for somebody who's, when you're about to retire, basically once you reach the age of 62, when you can qualify for a reverse mortgage, or even when you're approaching the age of 62, it makes sense to find out about whether or not a reverse mortgage strategy might fit for your long-term planning. And don't just sit down with me, but you can invite if you have an estate planning attorney, whether it's Jim or anybody else, or if you have a financial advisor, have them join the conversation. Have me show up with you at your financial advisor's office and explain to the advisor what they do not know about the modern, recently modified and improved federally created reverse mortgage program. Find out the facts. There are so many things about a reverse mortgage and about other complex planning issues that are really helpful to know early, instead of finding out years down the road and thinking, gee, I wish I'd known this way back when. I would have done this. I would have set up this particular plan. For example, somebody who reaches 85 and suddenly needs to pay for in-home care, but meanwhile they've spent almost all of their money that they had saved in their investment portfolio. If they'd only known that at age 62 they could have set up a reverse mortgage line of credit, and that available credit would have grown for them month after month, year after year, simply because that's the way the government wrote the rules. And it would be growing tax-free at a very attractive growth rate. Right now you can get a growth rate over 4%. When interest rates rise in the future, that growth rate goes up with interest rates. So you've got all this available credit, and you haven't traded in your home. You still own your home when you get a reverse mortgage. And so the cost to set it up can be as low as $4,000 or $5,000, and that can simply be financed. So instead of paying it out of your pocket. So imagine setting this up when you're 62. You've got the debt that you create on your home through the finance costs is only about $5,000. That's a very common example. By the time you're 20 years older and you need to tap into that credit line, the debt will have grown from $5,000 to maybe $7,000 or $8,000 or $9,000. And that's the only debt on the home. But meanwhile, you've got this line of credit that's grown from, say, $300,000 to maybe $700,000 or more, depending on the growth rate. And then you can tap into that credit line very easily to pay for your in-home care. And if you're incapacitated, hopefully you not only set up a reverse mortgage way back when, but you also got a power of attorney so that one of your loved ones could take care of you and tap into that credit line to pay for your in-home care. It's just so smart to look at these options early. Do it early. Don't put it off. Jim, would you agree with that type of an example?
Oh, I definitely agree, but there's one thing I'd like to emphasize that you touched on, and that's that the rules have recently changed a lot, and that makes it even that much more important that you go to somebody like yourself who is qualified and up to date on the rule changes.
That's a good point. Yeah, it's anything that you may have read about reverse mortgages, especially if it was on the internet or if it was by one of these so-called financial journalists who, unfortunately, they never really do thorough homework. Just don't believe it. Sit down with a certified reverse mortgage professional like myself. Find out the facts about how this government program currently works. This is a program that was created way back during the Reagan administration. And it's been a very helpful program for many, many people over the past 2 decades and more. And then just recently, the government made some rule changes, and some of them were very helpful changes along the lines of consumer protections, essentially helping to protect consumers from making bad decisions about how to have their reverse mortgage set up. Bottom line, you've got to sit down and find out the facts. To learn more about this, just give me a call. I can be reached at 858-784-0014. That number again is 858-784-0014. And I'm your host, Bruce McPherson, certified reverse mortgage professional. And for any estate planning questions with wills, living trusts, power of attorneys, etc., call Jim McFall, 619-238-1712. Again, Jim's number is 619-238-1712. When we come back, I'm going to go through an example of how proactive, strategic use of a reverse mortgage credit line can dramatically improve somebody's preparedness for retirement. So stay tuned.
Advice from Mr. Credit. Just call or text 619-786-7853. That's 619-786-7853.
Welcome back to the Lunch Hour with Mr. Credit. And today, it's Turnaround Tuesday on ESPN Radio 1700.
Welcome back to the Mr. Credit Hour. I'm your guest host today, Bruce McPherson. I am a certified reverse mortgage professional, or CRMP. I'm sitting in for Mr. Credit today. And we also have a friend of the show, Jim McFall, on the line. Jim is an experienced professional estate planning attorney. We've been talking about the importance of sitting down with a professional like Jim and planning for the future. A lot of people do not realize that it's very important in almost all cases to not just have a will, but also have a living trust, power of attorney documents so that somebody can take over your finances and care for you if you become incapacitated. Also important to have health care directives, etc. And we've been talking a lot about that during this the past 3 segments. And right now I'd like to turn to talking about specific strategic use of a reverse mortgage. I've found that the reverse mortgage program, which was created by the government over 20 years ago, is one of the most misunderstood financial tools that exist. And part of the reason is because it's can be very complex. There's a lot of options to choose from within this program. The other reason is before the government created this program, the reverse mortgages that used to exist were not really a good deal. So, for example, people used to lose their homes. So because of that, there's still a lot of myths about reverse mortgages. The biggest myth is people think that if you get a reverse mortgage, you're giving up your home or the bank gets the home at the end. That's simply not true. It's just a way. A reverse mortgage is a very well-regulated way for you to borrow against the equity in your home without having to make monthly payments ever. But that doesn't mean you're giving up your home. When the reason you don't have to make payments is because the interest, the interest is simply added to the loan balance that'll come due someday when you're gone. So the loan balance that will come due when you move, sell, or die depends. The size of that loan balance depends a lot on how much you actually borrowed, and did you borrow all the money right up front, which I do not recommend, or did you borrow the money judiciously over time, just bit by bit, carefully as you needed it. And one of the things that people typically don't know about a reverse mortgage is that you can choose to just leave the money sitting available for you in a credit line. It's kind of like a home equity line of credit, except that it has a lot of advantages. First of all, it's easier to qualify for than a regular home equity line of credit because we don't even have to look at your income or your credit scores. Those things still do not matter when you're applying for a reverse mortgage. So it's very easy to qualify for. Another advantage is that this line of credit, which officially is called the HECM line of credit or Home Equity Conversion Mortgage line of credit, can never be frozen or taken away from you or arbitrarily reduced. It's guaranteed to be there for you as long as you keep following the rules. And the rules for reverse mortgages today are very simple. You have to keep paying your property taxes. You have to keep your property insured. And you can't let the property fall into disrepair. So bottom line, you just have to keep doing the same things that you are already doing as a responsible homeowner. So as long as you're following the rules, this line of credit can never be frozen or taken away from you. And this is a big advantage over a traditional home equity line of credit. Jim, I don't know if did you ever have any clients who lost their home equity lines of credit during the financial meltdown a few years ago, or received letters from the bank saying that their line of credit had been frozen or arbitrarily reduced?
Actually, my clients are pretty fortunate in that. No, it didn't happen. I have heard other stories, though, from other people.
Yeah.
And I don't know why that's lucky. But
when I explained this option, this line of credit to financial planners, and I mentioned how it differentiates from a HELOC or traditional home equity line of credit, financial planners almost always tell me that they've had some clients who had their traditional home equity lines of credit frozen during that meltdown. But that cannot happen with the home equity conversion mortgage line of credit, or HECM or HECM line of credit. Another great thing about the HECM line of credit is the available credit that's just sitting there for you keeps growing and growing and growing. So here's an example. Let's say your home is worth $500,000. And you apply for the modern reverse mortgage, which is called a HECM, and you choose to have a line of credit. So and let's say you're only 62 years old, which is the qualifying age. So based on current interest rates and based on being 62 years old and having a $500,000 home, you would qualify for a line of credit that's right around $250,000. But that $250,000 that's just sitting there for you grows for you automatically every month, even if home values fall. I'll repeat that. Even if home values fall, that $250,000 keeps growing for you just because that's how the government wrote the rules. And this is tax-free growth because it's just a line of credit. And so let's say someday you take $10,000 out. So now it's dropped by $10,000. So let's say you take that $10,000 right up front. So your line of credit is only $240,000. Well, that remaining $240,000 keeps growing. It's that simple. And the debt that'll come due someday when you're gone is based on how much money you actually took out. It's not based on the available amount. And this is a very powerful feature. That line of credit can keep growing and growing. There's no cap on it. So it could grow even if someday your home value goes down. What if we have another financial crisis and home values collapse again? It does not affect this line of credit. You could end up with a line of credit that's even higher than what your home is worth, and it's still guaranteed to be there for you no matter what. It's an amazing feature, and it's an amazing way to plan for the future. The sooner you get one, the better. Because here's what a lot of people don't know about reverse mortgages is the amount of money that you can qualify for depends a lot on what interest rates are at the time that you apply for your reverse mortgage. Right now, interest rates are so low that they're below a certain threshold where if they were any lower, it wouldn't make any difference. In other words, right now, people can qualify for the most money possible. So imagine setting up a line of credit now that you may need 20, 30 years from now, someday when you've exhausted your other assets, someday when you've spent everything in your investment portfolio. Imagine doing this now, letting it grow and grow for you. Compare that to waiting and then 20 years from now applying for a reverse mortgage and finding that the amount you can qualify for is a lot less than it would be today because interest rates are a lot higher. It's just something to think about, and it's one more reason to plan for the future. Again, if you're interested in learning more about this, my name is Bruce McPherson. I'm a certified reverse mortgage professional. I can be reached at 858-784-0014. Again, that's 858-784-0014. And if you have any estate planning questions for our attorney Jim McFall, want to talk to him about power of attorneys, living trusts, etc., will, and all those things, give Jim a call at 619-238-1712. Again, Jim's number is 619-238-1712. Jim, thank you for joining the show. Sorry we didn't have as much time to talk about living trusts and wills during this final segment.
Pleasure as always.
Thank you, Jim. We'll look forward to talking to you again. Thank you, everyone, for listening. Have a wonderful day.
If you would like to contact Mr. Credit or access any free offers mentioned on the show, just go to MrCredit.org. That's MrCredit.org.